Well, howdy there, folks, and welcome into today's video. We got a lot to discuss in today's video. I'm going to show you portfolios. I'm going to talk about what stocks I'm buying. I just spent $14,000 on some stocks. I'm going to share what those stocks were. Talk about my investments. Talk about what's going right, what's going wrong, what's going horrible. We're going to get into a lot in this video that I kind of want to clarify and things like that because it was interesting. Somebody sent me a video. I've never seen a video from this particular guy before. There's a lot of people that report on me. It's like TMZ out there, man. It's pretty crazy. But there was this one video that was sent to me a few days ago. And this guy was talking about, oh, yeah, I don't like Jeremy over there, financial education. He's talking trash about me. He's like, oh, yeah, he's been buying gold mining stocks and lumber stocks, and he's always promoting those. And I was like, what? What? Gold mines and lumber stocks? Man, I talk about a lot of stocks in the channel, but and have invested in a lot of stocks over the years, but I ain't never invested or talked about a gold mining stock or lumber stocks. I'm like, what in the world? I'm like, man, I'm used to people kind of exaggerating things, but not just like flat out telling lies. Like, come on, man. Like, what in the world? I got a lot of people, a lot of you guys have been watching me for years, so like I never talk about gold mine stocks or lumber stocks and things like that. So I'm like, I got to do a video and just kind of clarify a lot of things and talk about this, show different portfolios and things like that, and talk about what I'm actually buying, what I actually hold, what I'm not buying, and things like that. I thought that would just be a healthy video to do, and I'm feeling super relaxed today, so I think it's a perfect day to do this. It's a Sunday, I'm recording this. Went to the spa. Oh, man. Got pampered. My wife told me I look 5 years younger. Oh my gosh, man's confidence is through the roof right now. So I think it's perfect to do a video like this. She's probably just trying to gas me up. I probably look the exact same though, to be honest. So anyways, guys, let's get into this. And man, I got abused. Man, you ever got a facial before and they do those extractions? Oh man, that was vicious. To my fellow men out there, oh my gosh, man, you ever get a facial? Get ready for the extractions. It's vicious, okay? So, alrighty. First off here, what I'm showing you is the public count. So the public count was started, probably 4 or 5 years ago in my private stock group. And every single move in the history of that account has been documented, every single buy order, sell order, things like that, okay? So what you're looking at is what's going on actively in the account. Obviously, this account has been absolutely devastated. And if you know me, I love being transparent, and I'm fine to call it the way it is. If I'm doing great, here's what's going on. It's going great. And when I'm getting devastated, I'm not afraid to shy away from that. Some people think it hurts credibility if you're the stock guy and you're getting, destroyed in the market or something like that. It doesn't matter. At the end of the day, I'd rather just be open and honest about this. And, if I'm getting destroyed in the market, I'm not afraid to, I don't shy away from that. I call it the way I see it. And when things are going great, which when the market does finally go risk on again, which I don't know, maybe it's in 23 or the back half of this year, we'll see. I don't even want to get my hopes up about timetable. I'll tear it up in the market. But right now it's been pretty devastating, right? I mean, this account at one point was, a $2 million+ account. So, a lot of money has been lost out of this account. Tesla obviously has fallen quite dramatically. I mean, this was a stock that was $1,200+ at the peak. Now it's $600 something, right? And obviously the gain's still insane, but that's because I was buying the stock back in these shares I got in this account was probably 2019. So, I've been holding it for several years, right? Elf on a Shelf. I took most of the profits with Elf on a Shelf over, the years essentially. So that one's just always done us tremendously well. Good makeup and beauty business there. Revolve's always treated us well, but we've lost a lot of gains on Revolve. Revolve at one point, this is crazy. If I recall, Revolve at one point was up 700%. This account, maybe it wasn't 700%, but I'm pretty sure it was up 700%. And, because I think Revolve at one point was $70+ a share, and my cost base is $10. So I remember it was definitely up at least, I think it was 500% at one point. So we've lost a lot of gains, but it's what happens when you're a long-term investor. You're not trying to trade in and out of positions, and you're going through a risk-off market with the NASDAQ down 30% from highs or so, right? Skyworks Solutions lost a lot of gains there, but honestly, every stock's like that. Palantir is a very new position. Now, if you're wondering why I got this little black bar next to it here, essentially, that's because Palantir is a position I'm looking to build out more in this portfolio. That might have been one of the stocks I just bought here the other day. Palantir is a pretty new position in this portfolio here. So, Palantir is, I think, not just in terms of like Palantir, it has a tremendous opportunity in future years. But with Palantir, I don't own any stock like that. I don't own any real, like I almost put them into the SaaS, software as a service type business model. I don't have anything like that, to be honest, in any of my portfolios. So I like Palantir not just because of the upside I believe the stock's going to have over the next 5 years or so, and how profitable the business model will be, how sticky the business model will be, their balance sheet and how good of a position that's in, obviously their product and how strong that is, right? But I love it because of it gives me another avenue of a business model that is, honestly, those business models trade at insane premiums. And especially when you go back into a risk-on market again, I mean, the premiums you get on SaaS business models are like nothing else. Gets those sorts of PEs, forward PEs, price to sales ratios, nothing trades like those stocks. Those stocks are what's called the creme de la creme. And the reason they trade like that is because basically, if you're a big company and you sign up for somebody like a Palantir, you're more than likely not leaving their service. And so they just keep getting that recurring revenue year after year after year after year. And they're seen as some of the safest business models out there. And so I think it's going to be not just a stock that does this well over the coming years, but I think it adds great diversity to my overall, different stocks out there. So definitely looking to add more of that one. And Dropbox is my cloud company, right? Google McDougal is a lot of things. And Google, here's the deal. The reason I don't have a black thing next to Google in terms of wanting to buy more shares is in this sort of market, there's so many positions I'm down on that I almost only want to buy if it's a stock I'm down on, essentially. So if Google goes in the red 5% or something like that, then I'm definitely interested in adding more Google in this account. Meta, oh my gosh, like Meta's just a steal at this price. Like it's a joke. So I'm definitely going to be adding more and more Meta shares over time. I'd love to build this into a much, much bigger position than it is. I wouldn't mind making this a multi-7-figure position, hopefully at some point in time. And this is not the only account I own Meta in either. Oatly, and I mean, honestly, my accounts usually mirror each other. So if I own, this stock in this account, I'm going to own it in my main private account as well. Oatly, I definitely want to add more Oatly, but I'm not in a rush in this particular account. And the reason being is I already own a ton of Oatly shares in 2 of my other accounts. So, I mean, I kind of feel pretty good where I'm at with Oatly, but if it drops in any meaningful way, I'll gladly pick up some more shares. Their growth is insane. Their 10-year out opportunity is just ridiculous. And I'm seeing them keep the shelves stocked better than they ever have, which means likely their Utah facility is up and running in a major way now. And so I really like to see that. Amazon, I definitely want to add more Amazon shares in this account. I look at Amazon as obviously the e-commerce side of their business is going to continue to grow over the next decade. Like I don't see that ever shrinking for at least this entire decade. 20 years from now, maybe that's a different story, but there's no doubt in my mind that it's going to continue to grow year after year. Amazon Web Services is an incredible sticky business model that I love. And I've secretly always wanted to own a big position in Amazon. And finally, I'm getting a good opportunity to add some shares of Amazon. So I'm taking advantage of that. I hope the stock drops more over the next 6 months. I would love to make this into a multi-6-figure position over time. The Planet, that needs to be combined with the other Planet shares that I have here, essentially. I don't know why that one's different than these ones, but I'll have to call Fidelity on that. PayPal, looking to add some more PayPal shares in this particular account. I could see myself maybe getting this up to a $50,000, maybe $75,000 position. Am I as confident in PayPal as I am Meta and let's say Amazon? Maybe not to that level, and especially Meta, but I'm very, very confident in the risk-reward profile. PayPal gives me under $100 a share, and that's why I would love to add more shares and get it up to at least $50,000, maybe $75,000. Honest, I want to add some more shares here. Obviously, that stock's just been absolutely decimated, in this market. They went public in 2021 after all the excitement had already faded in the market. And they've never been able to build a real shareholder base at that company yet, right, for the stock. And so although they've been executing on their business model, they haven't been able to build a real shareholder base. And then they had the comps year over year, which was the sanitizer business, which made the comps insanely tough. So they had to go through it, man. And that's how you got that stock to go so dang low. So, but I would definitely love to add some more shares. Honest, it's going to be a $20+ stock in a few years. I'm very, very confident in that. And I'm very, very confident in where their revenue is going, their net income's going. It's just like no one's even paying attention to Honest right now. And so they're just being priced as like a joke. It's, it is what it is. The Planet, I'm waiting to see what happens with the California location before I add more Planet shares. I really want to see what happens there essentially. And that location has been a very big disappointment. I would call it that. But the good news is, and somebody in the private stock group shared some pictures of the Planet location a few days ago, and I loved what I saw. Parking lot was packed. They had like vendors there. Like it actually looked exciting on the outside, on the inside, things like that. And they were doing a big sale and things like that. So that was the first time I've ever seen that location since it opened, essentially, the grand opening. It's the first time I've ever seen actually super busy, super exciting. And it was like, dang, it looks like the Vegas location looks. So I'm waiting to see like what happens with that California location. Can they get that? Because that was supposed to be a very successful location. And it just, to be quite frank, it has not been a very successful location. And so I've got to see confirmation on that one and see the numbers obviously improve quite dramatically for the California location. Once I see that, I'll be able to continue to add those shares. I'm just scared to add more shares into a situation that, it hasn't been pretty in terms of the California numbers. Okay. The Chef, obviously, I'm looking to add more Chef shares. They haven't had a chance to obviously build a shareholder base out yet. And on top of it, obviously they're a money loser. So no one wants to own that sort of stock in 2022. Let's just be honest. No one wants to own that. Let's be honest. No one wants to own a money losing company. That sure, their growth is insane, right? But they're fairly new public company. They went public just a couple of years ago. So, I'm just looking to continue to add shares of the Chef. They got a good balance sheet. They're going to get to profitability in the back half of 2023. And basically starting in Q3 of this year, I think we're going to start to see margins start improving. In Q3, Q4, trucking costs is coming down for refrigerated items and things like that. They got their new cold storage facility. So I think starting in Q3 of this year, we're going to start seeing major improvements to their margin line, which is going to give investors a whole new level of confidence. And for a lot of people that keep their eye on the Chef, they want to see those margins get better and better. And I think as Q3, they hit better margins. Q4, they hit better margins. Q1 of 2023, they hit better margins. Q2 of 2023, they hit better margins. And then hopefully profitability, or at least right around break even in Q3 and Q4 of 2023 is how it should play out. So I'm looking to add as aggressively as I possibly can, obviously, with the Chef here. Corsair Gaming is, I like that one in terms of the risk reward profile, obviously at Corsair Gaming, so which is why I'm continuing to add shares there. Obviously, gaming hasn't been the most exciting place after, obviously all the restrictions went away and things like that, but their brands are incredible from Corsair Gaming. Obviously, they're with the Corsair brand. They come out with new products. They came out with a laptop recently that I'm really excited about. They've, the Elgato brand, which is huge in the streaming space with stream decks and cameras and microphones and everything like that. So, I just love Corsair, and the valuation is just very, very compelling on Corsair now at this point in time. Andy's been leading that company for a long time. He's always done a tremendous job. So I think they got, obviously just tough comps. But the great news is they're pretty much past all those super tough comps now at this point in time. And everything just gets easier and easier for them as we get later into this year. And as we obviously will get into 2023, because then they're going to have easy comps to comp against for 2023, which is pretty darn exciting for me. Avant Brands, I'm looking to add some more shares of this one. Obviously, it's a penny stock, so I can't add too aggressively, but I'm definitely looking to add more shares of Avant. Maybe another, 20,000 to 40,000 shares of Avant. They've done a really good job executing on their business model. Don't let the stock price fool you on this one. You look at their numbers, they're actually very, very impressive. Look at their last quarterly numbers. I've been, extremely impressed. Voyager is a mess. Obviously, I've talked about that. That's just a disaster. So, so that's the public count. That's where we're at with that one. My dividends only account here. So, this is my only green portfolio right now. And like I said, I don't mind being fully transparent about this off. This is my only green portfolio I have right now, meaning green on the bottom line based upon the current positions I have. And the reason being is these stocks have held up better because they're seen as more established business models. They're not super high growth. Most of them are profitable. dividend payers, things like that. So they've done pretty darn well. Tapestry is done tremendous for us. Qualcomm, Pfizer, JWN, all those have done very, very well for us. JWN has their big anniversary sale coming up, by the way. I was actually just at Nordstrom yesterday. For those that follow me on Instagram, you might have saw a few pictures of that. JP Morgan, I got a black line next to this one because I'm actually looking to buy some more JP Morgan. Not in necessarily a big rush, but JP Morgan's got a pretty respectable yield on it. And the thing I like about JP Morgan, it's not that it's just a big business and, obviously well-established, good management team there and things like that, obviously extremely profitable. But the thing that's beautiful about the banks nowadays, and especially at JP Morgan, is they basically are too big to fail. So meaning essentially the Fed has to back these companies. So even if you get into any sort of real recession where people aren't paying their loans or things like that, the Fed's got their back because they have literally no choice. You can't let a company like that fail. So it's very different than any time period. Basically, the great financial crisis changed everything for the big banks. It made it so they could never grow like a beast again. And so the banks can never really become necessarily the biggest market cap companies because their growth is very, very limited nowadays because of the restrictions, obviously, the Fed puts on, the government puts on nowadays because of what happened in the last financial crisis. But with a company like JP Morgan, they're basically Fed backed at the end of the day. And they're just good cash flow business models, very profitable. Yeah, you're not going to, it's not like those are the type of companies you're going to see 50% revenue growth and 100% revenue growth and 35% revenue growth. But that's not what the intention is in the dividend account, right? It's profits. It's obviously taking low risk and just making money, right? Walgreens up about 5% there. That one's done okay. I really thought Walgreens was going to do better than it's done. I mean, it's held up well considering the market we're in, but I thought it would do better. No one really ever got excited about the shots, right? And I thought they would, but no one ever, got into that. So that just kind of was what it was. Target, I'm looking to definitely add more shares. This is a recent buy for me in this account. I probably added this one maybe, a week ago or 2 weeks ago or something like that. Definitely would love to build this into a 5-figure position in this account. Obviously, the dividend account's kind of a smaller account. It's relatively new compared to my other accounts. So I would love to build this into a $10,000 position or so. I'm hoping to do that over time. Foot Locker, kind of no man's land right now because the whole Nike situation there with Foot Locker. So that one's just kind of a hold for me at the moment. Wynn Resorts is a mess. And not because the company's done anything wrong, just mainly because of the China situation, right? Basically China's limited Macau. Now things are starting to open up a little more there, but then all of a sudden I heard of a big outbreak in Macau and one property had to close, not for a Wynn property, but for another company. And so it's hard to get super excited about Wynn because of the Macau situation. And it's just it feels like it's an ongoing thing. And it's when is Macau going to get back to normal? And that's just something I can't tell you when. I don't know. And no pun intended, I can't tell you when. It could be 2 months from now, could be 6 months from now, could be a year from now. I don't know. And so that's a tough thing for me with Wynn is just that the Macau business has been in a tough place. The Vegas business has pretty much, kept the company afloat and alive recently. But, and some of the numbers from the Las Vegas properties have never been better, over the past year or two. Despite Rona, but the Macau location just hasn't been good. So that's the thing that scares me about adding more Wynn shares. And they're not a dividend payer at the moment. They will be once their business gets back to normal, but they're not technically a dividend payer now. So I keep them in this account literally just because they should pay a dividend again in the future. So anyways, that's a dividend account there, okay? Now, I started this challenge with my boy Belly back on Valentine's Day because, he loves me, I love him, so we love each other. And we started this competition, and he's off to a great start. I got to give him respect. He's killing it, man. I mean, I should be relative with that. He's still getting tore up, down 15%, but he's doing better than my stocks. And, to be quite frank, this is just not the sort of market these stocks are going to perform well in, right? And so that's kind of what we're going through. He can run his victory laps for now. We will come back. This is a marathon. This isn't a sprint. And we'll come back and we'll take the victory when it's all said and done. But for right now, give him his props, respect. He's out in front by a lot right now. Just wanted to show this though. This is I went back as far as I could in TradingView on VT. And so VT as far back as it'll go is 2008. So when it was already in the crash, right? And VT in 14 years is not even 2x. Isn't that extraordinary? Gosh, Jeez, that's tough, man. Could have made 7 figures on Tesla stock like I did, but belly, you chose VT. Hey, everybody's got their own thing. That's what it is. So I bought some stocks. I found $14,000 just hanging around. It was in the couch. I was like looking for it for a while, and then it was there, and I was like, oh my gosh, this is beautiful. Okay, so I did some buying out there on Friday. Bought some Chef. I bought some PayPal. I bought some Palantir. I bought some Honest. I bought some Meta. I bought some Corsair, bought some Amazon. So basically I got, AWS, e-commerce, plus a lot more. I got gaming plus streaming hardware. I got, the metaverse. And then obviously I got FB, I got WhatsApp, I got IG, I got a diapers, wipes, and beauty business. I got a SaaS play, right? Data and artificial intelligence for companies and governments, obviously, as well. They're huge in the government space, which there's a lot of government spending going on right now when it comes to that space. PayPal, so I got fintech, and then obviously I got food, plant-based food specifically with the Chef. And all these companies have different growth profiles, right? Honest isn't going to be, like Chef, high growth. PayPal, I wouldn't call it high growth, I'd call it mid growth. Palantir, high growth, low growth. Low to mid growth, although they shrink revenues maybe over the next quarter or two. And then this is kind of like mid growth, I would call it. So, a little mixture of everything. Profitable companies, like profitable, not profitable, but should be profitable within, I would say, 4 to 6 quarters. Palantir, not really profitable yet, but they should be profitable in 2023. PayPal and stocks-based compensation has obviously hurt their GAAP numbers in a major way. PayPal, very profitable and not profitable as far as the Chef, but they should be profitable at the end of 2023 there. So that's kind of what's going on there. So, in kind of my opinion of the markets and kind of where I'm at and positioned in the market, obviously I like where I'm positioned now, and I'm going to continue to just be a buyer for the next 6 to 18 months. I don't think this crash is going to last forever. I don't think this is the end of the stock market, and the stock market's never coming back or something like that. I think we're in tough sledding right now between inflation, which is obviously freaks the market out, between the Fed working against the market actively right now, right? Between a lot of people just being scared in general. And when I say scared, I'm talking about investors, between the crypto mess that's going on right now. You obviously, and between obviously Russia, Ukraine, you have a lot working against the market right now. It's very clear. And that's how you get the NASDAQ down. I mean, a couple of weeks ago, the NASDAQ was down 34% roughly, 34% from highs. The only way you get a market that dramatic is by having a lot of things working against the market all simultaneously. And that's what we have going on right now. I do not believe that's going to last forever. I believe we will go risk on again. I don't know when that is. It could be the back half of this year. It could be 2023. Now, something we do know historically is in midterm years, and you can look back at the data for this, midterm years, usually the stock market does very, very well in October, November, December. I'm not getting my hopes up about that because in this market, when you have this big of a wall of worry, you can't really get your hopes up about anything, okay? But the thing that's interesting about this market is, what happens when the wall of worry starts to be destroyed? What happens when inflation starts to come down month after month, right? Continuously for 2, 3, 4 months in a row. Inflation's not going to continue going up 8, 9% for all of eternity. I can promise you that. There's a debate on, if it starts coming down over the next few quarters. I see a lot of commodities going down. That's very, very good news for us, right? Obviously, housing is, in my opinion, starting to downtrend. You can see it based upon the price cuts in a lot of markets and things like that. So I think this crazy, housing going wild and, raise everybody rents to the moon, I think it's going to be a very tough proposition in 2023 based upon, I think pricing is going to have to come down. And if you want any chance to sell a property, right? Which means the folks renting properties aren't going to have as much of an advantage. Russia, Ukraine, you can't get your hopes up about that. But what happens if there's some sort of agreement there, right? I don't think Russia wants to be in that situation forever. I don't think Ukraine wants to be in that situation forever. Is it possible there could be some sort of, agreement that comes from that toward the back half of this year? It's definitely a possibility, right? And so there's many various factors of things that, what if we have a recession and it's a very mild recession and it's not the 08, 09 recession? There's a lot of things that are scaring the market, and for good reason. But eventually this wall of worry will be destroyed. we'll go risk on again. And I think a lot of the stocks I own specifically, they don't just have tremendous stories, but I think, especially for a lot of the smaller cap stocks, as they get to profitability, I think it's going to be a game changer for the way those stocks are valued and the investor base. Whenever you can flip a company from huge money loser to then break even, there's usually a massive move up in the stock price. Whenever you flip from money loser to money maker, that's when you get that next big flip, okay? I've been doing this for a long time and I've seen it continuously in the market. Obviously, if you're in a risk on market, almost everything moves up because people don't really even, I don't want to say they don't think about profits, but that's not like the worry or the thought. The thought when you're in a risk on market is I need growth. Where's a 20% revenue company? Where's a 30% a year revenue company? Where's a 40% revenue a year company, right? And so, I think over the next 1 to 2 years, we're going to find out of the companies that went public in 2020 and 2021, we're going to find out which of those companies is a real deal Holyfields and the companies that get themselves to profitability and keep up good growth, and what companies will fall to the wayside. I think the truth will come out, right? There's no doubt about it. And some companies aren't going to make it. They're not going to make it to that side of profitability. They're not going to improve their margins, and they're not going to keep up the revenue growth. I think certain companies are. And I think those companies like Chef, Oatly, companies like that, I think they're going to be able to keep up very nice revenue growth for years to go in the future while expanding margins over the quarter after quarter after quarter and getting the bottom line to profitability, which in my opinion is going to be, game changers for how those companies are valued. So I remain as confident as ever in those sorts of companies, those sorts of stocks. And time just has to tell. So anyways, guys, I hope you enjoyed this. I appreciate you joining me for a video like this and just kind of going over what I'm investing in, what I am invested in, and kind of what's going on out there in the market and my opinion on it. So much love as always, guys. Appreciate you and have a great day.